You probably don't use up a lot of brainpower thinking about your bank. After all, you just deposit your money, then swipe your debit card or visit the ATM when you need it. Not so fast. To really get the most out of your bank and your money, it's important to fully understand how your bank works. So, what is bank? A bank is a financial institution licensed to receive deposits and make loans. Banks may also provide financial services such as wealth management, currency exchange, and safe deposit boxes. The banks are the lifeline of the modern economy. The banks play an important role in mobilization of deposits and disbursement of credit to various sectors of the economy. In most countries, banks are regulated by the national government or central bank. When you deposit your money in the bank, your money goes into a big pool of money along with everyone else's, and your account is credited with the amount of your deposit. When you write checks or make withdrawals, that amount is deducted from your account balance. Interest you earn on your balance is also added to your account. There are several different kinds of banks including commercial or corporate banks, retail banks, and investment banks. A commercial bank is a type of financial institution that accepts deposits, offers checking account services, makes various loans, and offers basic financial products like certificates of deposit (CDs) and savings accounts to individuals and small businesses. Commercial banks make money by providing loans and earning interest income from those loans. The types of loans a commercial bank can issue vary and may include mortgages, auto loans, business loans, and personal loans. Customer deposits, such as checking accounts, savings accounts, money market accounts, and CDs, provide banks with the capital to make loans. A commercial bank is where most people do their banking. Traditionally, a commercial bank is a building where customers come and do their banking. But nowadays, a growing number of commercial banks that operates exclusively online, where all transactions with the commercial bank must be made through internet. These virtual commercial banks often pay a higher interest rate to their depositors. This is because they usually have lower service and account fees, as they do not have to maintain physical branches and all the ancillary charges that come along with them, such as rent, property taxes, and utilities. Retail banking, also known as consumer banking or personal banking, is banking that provides financial services to consumers as individuals, not businesses. Retail banking is a way for individual consumers to manage their money, have access to credit, and deposit their money in a secure manner. Services offered by retail banks include checking and savings accounts, mortgages, personal loans, credit cards, and certificates of deposit. Retail banks come in a variety of types and sizes, from local community banks, which are small, locally run banks, to the retail banking services of large global corporate banks, such as JP Morgan Chase and Citibank. All of these banks offer retail banking services, which is a large portion of their revenues. For example, retail banking revenue for JP Morgan Chase made up 48% of the bank's total revenue. Investment bank is a financial intermediary that performs a variety of services. Most investment banks specialize in large and complex financial transactions, such as underwriting, acting as an intermediary between a securities issuer and the investing public, facilitating mergers and other corporate reorganizations, and acting as a broker or financial advisor for institutional clients. Investment banks are most known for their work as financial intermediaries. That is, they help corporations issue new shares of stock in an initial public offering (IPO) or follow-on offering. They also help corporations obtain debt financing by finding investors for corporate bonds. The investment bank's role begins with pre-underwriting counseling and continues after the distribution of securities in the form of advice. The investment bank will also examine the company's financial statements for accuracy and publish a prospectus that explains the offering to investors before the securities are made available for purchase. Let's understand how an investment bank works. Think of company ABC buying another company XYZ. ABC is not sure how much company XYZ is really worth and what will be the long-term benefits in terms of revenues, costs, etc. In this scenario, the investment bank will go through the process of due diligence to determine the value of the company, settle the deal by helping ABC prepare necessary documents, and advising it on the appropriate timing of the deal. Here the investment bank works on the buy side, and some other investment banks may be working on the sell side to help XYZ. The bigger the deal size, the more commission the bank will earn. Unlike the banks listed above, central banks are not market-based and don't deal directly with the general public. A central bank is a financial institution given privileged control over the production and distribution of money and credit for a nation or a group of nations. In modern economies, the central bank is usually responsible for the formulation of monetary policy and the regulation of member banks. Central banks enact monetary policy by easing or tightening the money supply and availability of credit. Central banks seek to keep a nation's economy on an even keel. It sets requirements for the banking industry, such as the amount of cash reserves banks must maintain vis-à-vis their deposits. Central bank can be a lender of last resort to troubled financial institutions and even governments. The major central banks include US Federal Reserve System, European Central Bank, Bank of England, Reserve Bank of. Thanks for watching. Please subscribe to our channel and press the bell icon for more awesome contents like this.